Welcome to today's episode of PC24 RETV. Well, I have two different setups running parallel to each other today. One is TikTok, totally stand alone. I am not broadcasting my studio, it is just a different setup. So if you are here, you want to interact with me, please feel free to talk. This video that is running on TikTok will be made visible on all other social networks such as Facebook, LinkedIn, YouTube. I have two YouTube channels, so it will go live on Facebook, my personal and my page, and it will also be seen over LinkedIn. So if you have any questions or concerns, feel free to talk. I have created a different setup that will be seen if you are watching me on a YouTube channel, which is PC24 RETV. You will see this right there. So I noticed that Top is here to interact with us. So hi, welcome.
Assalamu alaikum.
Assalamu alaikum. So just stay tuned with me for a second. I will talk to you right now. So before we start the program, I would like to wish each and every one of you congratulations and also thank you for tuning into our program. If you are
Thank you.
celebrating your birthday, please stay with us. I will listen to you in a second. Give me 1 second.
No, wait. Listen me. Wait.
Hindu.
One speak me, one speak you.
Okay, what do you have to
Okay,
say?
no blah.
हिंदुस्तान क्या है भाई ठीक है
You Hindu?
I'm sick.
युगांडू
I'm sick. Sick.
सिख मरीज ना हिंदुस्तान की तरफ पड़ गए
Ah, are you Hindu?
I'm sick.
Yeah, he's sick.
So I will stop this conversation for a while, and I will have to talk later about this person who is on TikTok. So what I wanted to say is that today's broadcast will have two separate channels and experimenting with it. So if you have your birthday today, if you are celebrating your anniversary, if you have a birth of newborn in your family, many congratulations to you. And I would like to tell you this thing that we always keep experimenting, and there is always some challenges that we face in all the broadcasts. So if you have something legible to say, I will allow you to come into my broadcast at a later time. So someone joined me, I don't know from where, but I'm sorry I couldn't continue the talk. So today I would like to share this information that came from Office of Superintendent of Financial Institution, and this is the headline here saying OSFI calls stress test incomplete, seeks to address problems of fixed payment variable rate mortgages. This has been going on for a long time. And if you remember my broadcast a couple months back, where OSFI was actually monitoring the fixed payment variable mortgages. So what are those fixed rate variable mortgages? Those are the mortgages, you also call them capped variable rate mortgages. So when you say capped, it means there is a ceiling and everything stops there. So when the interest rate rises, it has a component of principal and interest. But now with the rising interest cost, the ceiling stays here, but the interest rate is rising, compressing the principal component. And a time comes when it hits the trigger rate, and then it tries to go above the capped rate. But because of capped rate contract, when he took the mortgage, this cannot go higher. Now, your principal payment in your mortgage is zero. So that component that you are supposed to pay and are not paying gets added to the balance you already owe on the property. So what happens then? Your overall mortgage balance keeps going up and up because it's a capped variable rate. So some people have actually gone to the bank and fixed this problem. They increase their mortgage payments, if not to include principal component, but at least cover the whole interest rate there. Bank gives them an option that, okay, you cannot make the whole component, whole payment. Okay, we will hold your principal, but at least cover whatever interest rate you're paying. So let's say your capped variable rate is $2,400, but your principal and interest payment, they go $4,500. From $4,500, $3,700 is your principal, sorry, interest component, and the remaining $800 is your principal component. But you are only paying $2,500. So this $1,000 additional interest that you are supposed to pay and are not paying gets added, and then you are paying interest over interest over interest. So there was a problem, and OSFI sensed it way earlier when banks were extending the amortization rates and then telling the consumers, okay, you keep paying your monthly payments, but we will extend amortization. And the amortization is basically is the total length of time when your mortgage will be paid in full. And that never happens, at least in Canada. Every couple of years down, you have to renew your mortgage. Unlike US, where you can get a 30-year mortgage, but there's no change during the entire 30 years. But in Canada, amortization period is, let's say, 30 years, but you go to bank every 2, 3, 4, 5 years, whatever term you selected, and then the bank renews your mortgage at the then prevalent rates of interest. So what happens? You keep getting more and more debt, unlike US, where whatever you got stays same 30 years down the lane, righty? So there's a problem. So this is what the article says. I'm going to read it from the article. It says, it is no secret that Canada's banking regulator, which is Office of Superintendent of Financial Institution, has its sights set on fixed payment variable rate mortgage product. And the chief, Peter Routledge, he's the OSFI chief, big boss, that tells the banks how to perform, what to do, what not to do, and they can dictate terms. Peter Routledge reiterated that point during a speech today. So this news is pretty hot off the from the oven right away. So he said that the mortgage stress test, which ensures mortgage borrowers are able to handle higher rates by qualifying them currently at 2% above their contract rate, is effective but not perfect. So right now, if the bank has to give you a mortgage at 5%, so what they do is they qualify you at 5 plus 2, 7%. And if you can qualify at that rate, only then you will get funded. Otherwise, the bank will just say no. The option is then go to B lender who have slightly higher rate of interest. You are already suffering under huge rates these days. But then B lenders will give you higher ratios to serve, which is 50-50. And if they don't qualify you, and if you do not fit into the debt service criteria of 50-50 ratio, which is GDS, gross debt service ratio, and total debt service ratio, I can always tell you if there is a question about what GDS and TDS imply. Please let me know if you have any question. So then, if you don't qualify under B lender, then there are lower chain of lenders. As you go down and down and down the ladder, what happens? You are facing higher and higher and higher rates of interest. Let's say you get a private mortgage. The private rate mortgage may be at 8%, 7.5% versus 5% you might get with a bank, right? Just an example. So the prime rate today is 7.2%. Most of the variable mortgage for first time home buyers, that is high ratio mortgages, are prime minus 90 or 95 basis points. But if you are refinancing, The variable rate could be prime minus 40, 30, 20, whatever lending institution decides. It will be lesser than the insured mortgages. And people ask me, why is it so? When someone is paying lesser down payment as a first time home buyer, they are getting more discount on variable rate versus someone who is putting down 20% down payment but they are paying way more interest. Why is it so? Because those mortgages are insured by Canadian Mortgage Housing Corporation or Sagen or Canada Guarantee. These are insurers that tell the bank, finance his house or their house at less than 20% and we will cover any shortfall if ever happens in the payment. Like if a borrower defaults, he doesn't pay anymore, the bank's mortgage goes in default and the bank sells the property, and if the bank suffers loss in recovering its money that it lent out to the borrower a couple years back, CMHC or the insurer providers will compensate the bank. So bank is okay, guaranteed that they will not lose money. But with uninsured mortgages, the banks have to insure it themselves. There is a cost involved. But don't you think the first time borrowers, home buyers, they actually pay CMSC a premium that could be as high as 4.1%. Thank you very much, everyone who joined this broadcast. Appreciate your participation. Please feel free to share your thought process and let me know what you want to talk about. So during the pandemic years, when interest rates fell to historic lows, many mortgagors took out variable rate fixed payment mortgage. He said during the Scotiabank Financial Summit, we're talking about Peter Routledge, the chief of OSFI. So these mortgage products, which are offered by most big banks, except for Scotiabank and National Bank, keep monthly payments fixed as interest rate fluctuates. It's only that if the rate is lower, you pay more towards your principal payment, but if interest rate is higher, you pay less towards your principal component. This is how it works. So the Scotiabank and National Bank do not give fixed variable rate mortgages. So now OSFI estimates that $369 billion worth of outstanding mortgages out of a total mortgage market of 2.1 trillion currently have fixed payment variable rate mortgage products, that is capped variable rate mortgages, right? So now and this is out of 2.1 trillion mortgage currently out there, $369 billion are capped variable rate mortgages or fixed rate variable rate mortgages, fixed payment variable rate mortgages. So of these, approximately 260 billion worth have seen their amortization periods soar to 35 years or longer, which is not available. So what happens when the 35-year amortization ends and it is time to renew the mortgage? It will return to the default payment, which is maximum 30 years. So now, because initially, in order to keep your fixed payments uniform, untouched, the bank would extend the amortization period. But now, once your mortgage comes up for renewal, now what they will do is they will not give you extended amortization. So it will revert to 30 years at 20% because second time mortgage is only available at 20%, which is a conventional mortgage. So it is better OSFI says a fixed rate products are less prevalent. Not fixed rate, that slip of tongue. A fixed payment variable rate mortgages do not exist or are very less common. So OSFI's concern with these products, however, comes from the fact that when the term renews, so this is what I am saying, the mortgage goes way, way higher, and this can be a big trouble for many lending institutions, and nobody would like to go there. So it is way better if these things are addressed well in time. So this is where OSFI kicks in, and OSFI wants to address this issue. So now, so when that means many borrowers may be at a great risk of losing their homes because the loan, the debt will way exceed, way more than what they are paying now, and nobody wants to, put people in that perspective. And this is so true, right? Because if that happens, trust me, things will be very, very upsetting for those people. And I hope people understand this and try to make up their payments. I know it's hard. It's hard. I can feel it. We are out on the ground, and I know when people tell us about their hardships and how they are trying to cover their mortgage payment. But OSFI and the government have different roles to fulfill. So regardless of whether you like them or not, or love or hate them, they will do what the economy needs them to do at this time. So OSFI is currently conducting a comprehensive review of guideline, which is B20, and that focuses on enhancing credit quality and mortgage underwriting, expanding the scope of the guidelines and incorporating recent supervisory insights. So something will be done to fixed payment variable rate mortgages. So be ready to hear some news that may not be great for us, because it may be very bitter. It will be like a bitter pill, quinine, we used to say. As part of this review, earlier this year, OSFI unveiled 3 new regulatory proposals focused on debt serviceability. The proposed new rules, which have not undergone public consultation, include loan to income and debt to income restrictions, new interest rate affordability stress test, and debt service coverage restrictions. So a couple things are going to be in place very, very soon, and that will make it extremely difficult for many new mortgage borrower if you are looking for fixed rate variable mortgage. So Routledge also confirmed that OSFI will share the feedback it received from its industry consultation as part of its semi-annual update. So I suggested earlier that the mortgage stress test was imperfect. Perhaps it's better to call it incomplete, Routledge said, adding that the regulator is aiming to implement common sense protections that work effectively both when rates are high, as they are today, and low, as they were during COVID pandemic. So I'm sorry, I just saw someone asking to join the broadcast. I just missed it. If you kindly send me the invite again, I will take you in. But the topic here is mortgages, and I think you would like to talk about that, or if you have any question relating to real estate, you are more than welcome to come here. So Routledge said, our primary aim is to ensure that Canadian homeowners can afford to service their mortgage in good times and hard times. As a secondary goal, we aim to ensure that OSFI's measures impact our regulated constituents proportionately, such that all lenders in the federal financial system, regardless of size, can compete and take reasonable risk. So this is what is going on in the market. You may see something very soon, and it said it will release its finding in October. That is just a few days down the lane. So get ready for some bitter news. On the other hand, the governor of the Bank of Canada, Mr. Macklem, said it is possible interest rates are not high enough. So, where are we heading to? What do you want to say about it? Well, I invite you to join my broadcast at this point. Let me know, what do you think should be done? How should Bank of Canada behave? I would use the word behave rather than act. If you were the governor of Bank of Canada, what would you have done differently to address the situation? You are more than welcome to join the broadcast, but please keep it relevant to the broadcast. So, not like someone who joined me earlier and I didn't know what they are even saying. So, I would love to have you join the broadcast, say your thought. If you were the governor of Bank of Canada, what would you do differently to address the problem with the mortgages and inflation? So, well, it's time for you to role play as governor of the Bank of Canada. So, this is coming from Bank of Canada. It's not my mindset. It is what Bank of Canada's governor, Tiff Macklem, says. And what he says here is this. While the Bank of Canada is encouraged by the way higher rates are working to slow inflation, Governor Tiff Macklem said it's possible interest rates are not high enough. So, what do you mean by that? Whenever he says something like that, something bad goes to the industry. It may be another jump. CIBC predicted that the interest rates, the policy rate actually can go up to 5.25. Right now, the policy rate is 5.0%. If it goes to 0.25, the prime rate will jump up to 7.45. And then the rates will also go up according to that, whatever ratio they take, because it's mostly prime minus 90 or prime minus 40 for conventional mortgages, more or less. But every lending institution sets its own criteria. It depends how much business they need, right? Banks have their own goal. Technically, they don't want to give out money. Government doesn't want to input money into the economy. So everyone is withdrawing, and keeping to themselves. So that's the problem. That's how we are seeing the demand being curtailed and less people going to restaurant and restricting their travel to international destinations. But they are still going out. They are now going out local. Well, it's time to discover Canada because of tight travel pricings. It's too much. So monetary policy is working to bring inflation down, and we are encouraged by the progress we have made so far. This is to quote Governor Tiff Macklem, and he was talking to the Calgary Chamber of Commerce on Thursday, one day after the central bank, which is Bank of Canada, opted to leave its policy rate unchanged. But we are not there yet, and we are concerned progress has slowed. So the progress has slowed, but they say they are not there yet. It's working, but we have not achieved our target. So we have to wait, right? So Macklem said that with the consumer price index inflation now at 3.3% as of July, down from a high of 8.1% in June 2022, the bank's 2% target is now in sight. So they can see it. We are at 3.3% rate of inflation. In June last year, it was 8.1%. That was when banks started tightening so many things, and we got 3 or 4 raises in one announcement that killed people's dream of buying their home. And I saw many people abandon their idea of purchasing homes. But the market is still working good. If I tell you what's going on in the market, you will be amazed that the market is not bad. It is still doing great. and I just closed my data window. Anyways, I will open it up later as we speak. But anyway, so the new release is we have the new release of the housing market. So this in the August month, 5,249 houses, so 5,294 houses were sold, and City of Toronto sold 1891, and rest of GTA, which is 905 area, it's designated as 905. It may not be your phone's code, area code. So that sold 3,403, which is much, much less. 5,294 houses exchanged hands at an average price of $1,082,496, and there were only 12,296 listings. And in 2022, the average price was $1,079,048. But because the conditions were very, very tight in August last year, there were 5,584 listings sold at that time. So this time the sold is 5,294 versus 5,584 in August of last year. There were 10,578 new listings in the market last year. Now we got higher new listings and more active listings. Active listing are about 16.5% more than the last year. So, and then we'll talk about the drill down of how the data moved around. But let's go back to what Tiff Macklem has to say, because that basically concerns us. If you are planning to buy a house, be wary of all these things. Be very careful when you are drafting your offer about how much to ask for and how much to offer on a property. It requires not only comparative market analysis, but a bit more information than that, such as how the market will perform 3 months down the lane when you actually go out to close the property. People may say anything. Today I went to see a house, smaller house, listed for $929,000. I spoke with the agent and he said, well, I'm expecting more than $1 million. Not happening. Not happening. All right. So there are many things that you have to understand when you write an offer. Do not just blindly bid on the properties. Blindly bidding is a thing of the past, so you should stop doing it. I know it's happening. Many agents will tell you that many properties are getting multiple offers. I know of one property, 24 Hartnell in Brampton, that got 4 offers last night. Let's say you were the 5th offer and they wanted you to offer way more than the asking price. I will suggest you to leave the property. Find another property which does not have multiple offers on it. It's no time to blind offer. The banks are very tight on giving you the funding, so please do not do it. I will take a quick break. It will be on my other broadcast, not here, but stay tuned. We will come back after this little break. Let me take a break. Thank you. Bye-bye. Are you thinking of selling your home? You are covered. From my experience of 14 plus years in the real estate industry, this is what I have come to know. There are 3 major concerns that any home seller would want their realtor to answer. Number 1, how much is their home worth? Number 2, how long will it take to sell their house? And number 3, what will the agent do to make it sell? I have answers to all these questions. To schedule your one-on-one appointment, call me at 647-424-0358. Once again, Paul Chima, broker with Remax Prime Properties. My phone number to call is 647 424-0358. Call me now and get moving.
From a vast experience in immigration industry, this is what I've figured out. Clients want to know if their application is submitted in a timely fashion, what a representative can do to serve best interest of their client. Clients are informed on a regular basis about the progress of their application. We deliver what we promise. My phone number is 647-465-8894 or reach me out at 639-998-1992.
Are you thinking of a career change or adding another one to your portfolio? Well, you are thinking right. Call Sarabjit Luddar at 416-879-3039 from Beyond Care Insurance Solutions. She also deals in life, long-term travel, critical illness, disability insurance. Give her a call today at 416-879-3039. This is what we can tell you. She will always give you the right advice and help you find out if being an insurance advisor is your piece of cake. Are you looking for a reliable legal office that can handle your closing in the most effective manner? If yes, please get in touch with Rakesh Joshi at 416-213-8600. Joshi Law Office provides all the legal advices about real estate law, business law, immigration laws, notarization and affidavits, wills and trust. Give them a call today, 416-213-8600. ਅਵੰਚਿਆ ਬੜਾ ਖੁਸ਼ ਤੁਰਿਆ ਹੋਣਾ ਕਿ ਲਾਟਰੀ ਲੂਟਰੀ ਲੱਗ ਗਈ ਤੇਰੀ। ਕਾਸ਼ ਇਦਾਂ ਹੀ ਹੁੰਦਾ, ਲਾਟਰੀ ਲੱਗਦੀ। ਵੈਸੇ ਗੱਲ ਤੇ ਲਾਟਰੀ ਵਰਗੀ ਹੈ। ਮੈਂ ਆਪਣੀ ਲਾਈਫ ਦਾ ਬੀਮਾ ਕਰਵਾ ਕੇ ਆਇਆ ਤੇ ਜੇ ਮੈਨੂੰ ਕੁਝ ਹੋ ਗਿਆ ਤੇ ਮੇਰੇ ਪਰਿਵਾਰ ਨੂੰ ਮੇਰੇ ਮਗਰੋਂ ਕੋਈ $1 ਮਿਲੀਅਨ ਮਿਲ ਜਾਊਗਾ। ਉਹ ਅੱਛਾ, ਇਹ ਕਿੱਦਾਂ? ਉਹ ਜੇ ਤੈਨੂੰ ਜਾਣਕਾਰੀ ਚਾਹੀਦੀ ਹੈ ਤਾਂ ਕਮਲਜੀਤ ਬੋਲਾ ਨੂੰ ਸੰਪਰਕ ਕਰ। ਉਹਨਾਂ ਦਾ ਫੋਨ ਨੰਬਰ 647-772-1481। ਹੁਣੇ ਕਰ ਲੈ ਫੋਨ, ਬੈਠੇ ਨੇ, ਨਹੀਂ ਤਾਂ ਮੈਸੇਜ ਜ਼ਰੂਰ ਛੱਡ ਦੇਂ। ਉਹ ਬੱਲੇ ਤੇਰੇ। PC24 ਦੇ ਪ੍ਰੋਗਰਾਮ 5 ਚੈਨਲਾਂ ਤੇ ਬੜੇ ਸ਼ੌਕ ਨਾਲ ਦੇਖੇ ਜਾਂਦੇ ਨੇ। ਜੇ ਤੁਸੀਂ ਆਪਣਾ ਬਿਜ਼ਨਸ ਸਾਡੇ ਨਾਲ ਪ੍ਰਮੋਟ ਕਰਨਾ ਚਾਹੁੰਦੇ ਹੋ ਤਾਂ 647-333-2273 ਤੇ ਕਾਲ ਕਰੋ। ਕੁਝ ਸਮੇਂ ਵਾਸਤੇ ਇਹ ਸੇਵਾਵਾਂ ਬਿਲਕੁਲ ਮੁਫਤ ਦਿੱਤੀਆਂ ਜਾ ਰਹੀਆਂ ਨੇ। 647-333-2273। So welcome back to PC24 RETV's broadcast, and we are talking about mortgages and how things are going around. If you are Canadian and would like to talk about the housing market, well, by all means, you feel free to join with us, and I would love to talk with you. So I'm sorry, I will have to remove this. Yeah, please, because the conversation is different than what we anticipate. All right, please excuse me for not being able to include your broadcast into my program. So check me out on YouTube. PC24RETV is my channel name. Awesome. Thank you very much for that. So we're talking the housing market in Canada, and the housing market has become totally different these days. And had you come on my broadcast, if you are Canadian, this is what you would see on the screen. I have to check it out. I'm sorry, something is not working for me. This is a new experience for me. Awesome. I don't even know what to do about it. Oh my goodness. Oh my goodness. Alrighty. It's new fun time. No issues at all. So, yeah, sorry. I can only, bye bye. Bye bye. So, well, I have this TikTok running right here on my computer, on my cell phone. I do not understand how to handle this. It's a new thing for me, but anyways, it's pleasing. And just because the young lady was having a lot of fun, I really liked it. And I have this gentleman from all of him Dubai. That is awesome, Dubai, and how close we have come to. So if you look at him, he's here. Hmm. Sorry, young lady, I don't understand. Are you talking my language?
You don't understand English?
I do understand English. The broadcast is in English, actually. Sorry. The audio was mixing up with
I
other
know
guy.
English.
All right, sure. What do you have to say? Go ahead. You're live on
I
channel.
have nothing to say.
Okay. Okay. Thank you.
I'm just hearing what you're saying. Bas.
Awesome. Fabulous. Thank you very much for being here. Appreciate your input here. So we are talking about the housing market in Canada. So the housing. So we're talking about Macklem. What the Tiff Macklem is saying, and Tiff Macklem is actually saying that there may be another rate increase very soon, and when that happens, things are going to be very hard for many families. So be very careful when you are planning to buy a house, but you know what, you are unable to afford at the time of closing. Be very careful about the money you have. Things will be very different. Mhm. If you were living in Canada, you have any experience of house buying? Say that again. If I speak in Punjabi, you wouldn't understand my Punjabi language. Okay, okay. All right. Sorry, young lady. I think because I would appreciate anyone who can contribute to my topic. If you do not understand the topic, then I'm sorry. I can't keep the conversation going. My apologies. And I am really sorry for that if I could not include you in the broadcast. Please excuse me. I hope you understand. Thank you. I will take care. Bye-bye. Bye. I have no idea how to handle this situation. Oh my God. Where am I? Oh, shoot, man. I started a Pandora box and I cannot stop it. Bye. So this was kind of getting very silly about the broadcast. So anyway, so I think that didn't work well. So it's kind of a fun game with us. So anyways, let's come back to our broadcast. So Macklem said with the consumer price index now at 3.3% as of July, and the bank's 2% target is now in sight. That's good news. But Macklem said that with the consumer price index, CPI inflation now at 3.3% as of July, down from a high of 8.1% in June. So the bank's target is okay. They are fine with it. So, but the problem comes when we have to look at the OS phase, new observation saying things are very hard, and they probably will increase the. They will reveal something in the coming month, which is October. So let's see how it goes. And oh my good God. Very nice background. I try to make it look very nice, but it kind of got mixed up, and I'm trying to find where I was when I was sharing this nice picture of an old watch, and here it is. So, well, we are going live once again on TikTok, which is here we are. So now we're talking again. It's 7:14 p.m. We have only 15 minutes left. A new experience, and I'm enjoying it. So just as it took longer to see clearer evidence that higher interest rates were moderating demand in the economy, it may now be taking longer for this to translate into lower inflationary pressures. The other possibility, of course, he said, is that monetary policy is not yet restrictive enough to restore price stability. And unfortunately, the longer we wait, the harder it's likely to be to reduce inflation. So that means there is kind of a hawkish approach. This is what they call the hawkish approach, like a hawk. So, which is a kind of something very dangerous coming up for us. I'm totally, in to contain that situation. But what would you do differently? Your comments, your thoughts on this are most welcome. Oh my God. I'm sorry I couldn't hear the lady, and I really wanted to interact with her. But because I'm listening to myself and other broadcasts, this is kind of very crazy. So it's difficult to hear what I'm listening on this side. Maybe next time I will have a different arrangement, but we'll keep developing the system. So the housing is actually contributing to inflation. We all know that. But at the same time, rates are also contributing to inflation. So if they stop rate increase and start lowering them, the inflation automatically will come maybe up 1.5 to 3% down automatically, and we would be in the goal of a target rate of 2%. So McCallum acknowledged the fact that mortgage interest costs, which are up 30% compared to last year, and directly a result of banks' own interest rate hikes, are now the largest contributor of headline inflation. Thanks, Mr. McCallum. You acknowledged the obvious. What about the letter our premier has written to the governor, the do not rate the hike? Come on, must be a joke. So it is true that if we hadn't raised interest rates, mortgage cost might be lower today, but inflation throughout the economy would be a much bigger problem for everyone. I keep watching videos from Pakistan where they say the inflationary pressures are very acute. The rates have gone like through the roof. A Canadian dollar would fetch you more than $250, and a US dollar in Pakistan will get you more than $325 as per my best knowledge. So correct me if I'm wrong. And I see Pakistan raise the utility bills, the hydro bills or electricity bills, and people protesting against that. So we do not want that kind of situation in Canada. So this is what the governor of Bank of Canada, they are trying to do. The governing council, actually chaired by the governor. So excluding mortgage interest rate, CPI inflation is close to 2.50. That's what I said. It may be like 1.5, 1.10% down if the mortgage rates were down, right? But if they do it, inflationary pressures will be too high. So to measure underlying inflation, Bank of Canada, they need more systematic way of excluding components with big movements on both the upside and the downside. And petro products are one such thing. Second is the food cost. They are very volatile in the market. So he said that the reason the bank prefers core measures of inflation as a better bar on underlying inflation, such as CPI trim, which excludes mortgage interest cost. But even then, even that measure of inflation is still at 3.5% since it excludes other prices that have dropped sharply over the past year. And as he has done in previous speeches, Macklem acknowledged how difficult interest rate hikes have been on Canadians. Thank you very much, Mr. Macklem. And you know who is the problem here. But letting too high inflation persist would be worse. That is true. We are confident that 2% is the right target. The target is now in sight. We need to stay the course. So yesterday or day before, I spoke about what different lending institutions think about future. And from them, I mentioned BMO Bank of Montreal predicted that by end of 2024, the mortgage rates, the policy rate would be at 4.25%. CIBC would end at 3.50%. NBC would be mentioned that it would be 4%, the policy rates. RBC said 4% projected policy rate end of 2024. Scotia mentioned 3.75 and TD mentioned 3.50. So CIBC and TD, they predict that the policy rate would be 3.50 end of 2024, right? And BMO is the only bank that said it will be 4.25%. NBC and RBC predicted 4% policy rate, which would be 1% down by end of the next year. And Scotia is at 3.75%. So this is where the blending institution predicted where the policy rate would be. And now you can plan when to go for your product or the purchase of your property. So these two were the important news today, and I hope you got benefited from them. So OSFI's review of the stress test and saying that it is insufficient, it has to be changed. And the second, Macklem statement at Calgary Chamber of Commerce that interest rates aren't high enough. So he acknowledges that people are reeling under pressure due to mortgage rates, and he agrees, understands, but at the same time, he's saying you wouldn't want the higher inflation because that means your money depletes value. It would be same thing if they keep the rates low but let the inflation go higher, so your money will be meaningless. That means you will end up losing buying power of your money. So Bank of Canada is trying to protect the value of our money in the banks. So make sure you have the right knowledge. So please be with us in our broadcast and like, subscribe and share our YouTube channel, which is PC24RETV. The link would be in my profile, which is bio link. This is what you said. So, September 7, RBC um, produced a report which is called Proof Point. And according to this report, it says international students have a fast track to Canadian employment. International students have a fast track to Canadian inflation. This is so the Canadian employment inflation. My God, Paul, wake up, wakey, wakey. For immigrants, a Canadian education significantly reduces skill underutilization or the mismatch between their education levels and their jobs. Immigrants who study in Canada do far better in workforce than who don't, and almost as well as their non-immigrant peers. A Canadian education promotes higher or stronger language proficiency, faster integration into labor market, and quicker acquisition of work experience. This is a proof point from RBC Economics, and this is so true. Another point they raised: this allows Canadians, the newcomers, to overcome barriers like inadequate recognition of foreign credentials and biases in the hiring process. So the bottom line for newcomers, a Canadian education is a key stepping stone to labor market success. For Canada, the international student stream is a more efficient source of immigration and a key to unlocking labor productivity. Immigrant skills are not being fully tapped. This is what is another bullet point they raised. So in the previous work, RBC identified a significant mismatch between immigrants' education levels and the jobs they hold. I see two invites, but I am really sorry I cannot have invites here. I will have to refuse. I can only take if you message me that you want to speak about real estate, then I will let you in. So, the underutilization of skills is especially pronounced among those trained for industries currently plagued by labor shortages, such as healthcare. According to data from the 2021 census, 30% of immigrants to Canada with a degree in medicine, dentistry, veterinary medicine, or optometry worked in unrelated fields, compared to just 4.5% of non-immigrant non-immigrants also educated for these fields. The same gap exists in other sectors and tends to grow wider as the level of education attainment rises. So these are some genuine points raised by the RBC report. So a Canadian education provides an earning advantage. So when you are studying inside, well, you have the ability to outperform the other people, right? So a Canadian market makes it much more lucrative to gain better jobs and integrate into the society, the labor market, the labor force. With a Canadian education, immigrants are much more likely to find jobs that match their education. That's so cool, right? So median immigrant income in 2021 by location of study. If you studied in Canada, your annual income, like median income, annual median income is about $52,000. But if you educated outside Canada, then your median income annually would be close to $43,000. This is a difference of $7,000 or $550 per month. It may be more. This data is from 2021 and provided by Statistics Canada. A third of international students become Canadian permanent residents. A third of international students. And from 2000 to 2004, a different line that is 2010 to 24 cohort, 20%, 32% for 2005 to 2009, 2000 to 2004, 33%. So it is 20% right now, and years since first study permit obtained. This study, if you need more information, I am more than available to discuss these with you in person. If you want to list your house, I would like to share my 18 points, 18-point listing plan of action with you. So I would just need to sit down with you and walk you through the whole 18-point and the things that we do to make sure your property sells. There are three major concerns that a homeowner who wants to sell their house is concerned with. One is how much their house will sell for, and the second is what time it will take, or how long would it take to sell their home, and the third one is what would the agent do to cause it sell. So these three major concerns in the minds of any homeowner who is thinking of selling their home, I address these questions when we meet in person. So please give me a shout at 647-424-0358 for all those people who joined my broadcast from Dubai, and the other young lady, I'm sorry I could not understand them. My apologies, sincere apologies. Hopefully when we're talking some fun time, we'd like to interact with them in a much better way, or maybe I'm still trying to learn how to make my TikTok lives better. Anyways, it's time for me to say goodbye to you, and before leaving I would like to offer my sincere condolences to those families who lost their beloved one this day. So it happens, we all are on a one-way journey. We are not going to get second chance. So we will all have to leave this planet, some early, some later. And this is very uncertain, very, very uncertain. I have seen very young people leave this planet so early, which is very painful. And I totally can feel your pain if you lost a beloved one today. So my sincere condolences to you, and PC24RE TV and all its partners will definitely pray to God for peace to the departed soul, and also peace to you. Please gain your strength and get over this vacuum in your life. You have to keep walking. Thank you very much once again. PC24RE TV, please like our channel, subscribe and share it. The channel is PC24RE TV. Thank you very much once again. Goodbye.